5 years out, if Bitcoin's not at 500,000, I'm wrong on the adoption cycle.
$500,000 Bitcoin target by billionaire hedge fund manager. The Fed raises interest rates by 0.25%. What does this mean for inflation and also crypto? Sandbox Metaverse pumps 8% overnight. Should you be buying land in the Metaverse? And also, which Metaverse should you be buying in? We've got all that research paper and analysis here today, as well as why central bank currencies are actually bad for us. Welcome to our daily crypto show here at Collective Shift, where I walk you through in 8 to 10 minutes all the latest, most important news and analysis in crypto with OnChain Analytics, fundamentals, and sentiment backing all the things here. No BS. Let's get into it. Mike Novogratz, the Galaxy hedge fund manager, has a 5-year forecast of $500,000 Bitcoin. He's also saying that the forecast range in the short term is somewhere between $30,000 and $50,000. That's based off the macro environment that we're currently in with the Fed raising interest rates. He thinks we're probably going to be stuck in this range for at least the next 12 months. But beyond there, he's got a macro 5-year target of $500,000 Bitcoin, which is really interesting. It's always good, I think, for sometimes a little bit cheesy, some of these price targets, but when you've got someone coming out, a billionaire hedge fund manager in Mike Novogratz, a pretty respected guy, you start to listen to these sorts of things. And in that video we just played, you get his thoughts around where we're currently tracking for Bitcoin and why. So it gives a little bit of confidence in the longer term. Obviously short term, a little bit different. The Fed overnight has raised interest rates for the first time since 2018. Basically they're coming out and trying to curb the inflation pressures that's coming out in the wider economy right now. We've seen the biggest rise in inflation. Usually the central banks are trying to target a 2% increase year over year. And the CPI came out in the last few weeks and that number was 7.9% this year, which is about 4 times as high as where they're targeting. Obviously the central bank, their objective in mind is to try and increase the economic prosperity across whether it be the US, Canada, Australia. That's their goal. Obviously, we've had some really great growth over the last few years, but it's gotten to the point now where there's so much money in the economy, there's so much money floating around that businesses start to increase prices because there's an influx of capital and cash. With that, as businesses increase prices, it causes inflation. And a way to curb the inflation is to increase interest rates, which basically make it more costly for businesses to take loans, which theoretically less capital, less business growth. You're not employing as many employees, you're not growing as much. The stock market continues to grow, but probably not as that same rate because of these companies have less capital to fuel the growth at a very simple level. So by increasing the interest rates, the idea is that it becomes more costly for businesses to be able to take that capital and grow. So growth comes down, expenditure comes down, everything contracts, and we sort of try and curb that inflation process. But as Pomp came out and tweeted overnight, 0.25% interest rates is like bringing a water gun to an inflation war. Do we think this is actually going to have too much of an impact? Probably not. It is a difficult job. I mean, how do you reduce inflation without really, heading into a time and a place when things are really difficult? And I think what we're seeing now for those people that don't hold assets, that don't own Bitcoin, hard assets, properties, good companies, the consumer inflation, everything that's tied to the US dollar will continue to decrease. So if you're holding US dollars, Australian dollars, whatever, the purchasing power of that dollar will continue to increase. So it's more important than ever to hold investments and hard assets. But what happens if you can't afford these hard assets? Well, I think what we're going to see, unfortunately, is the richer will continue to get richer because they're the ones that are holding the assets, and the poorer get poorer because they don't hold those assets. And that's where that education divide is. The rich and the people that are educated understand you need to hold assets, and the people that aren't educated don't know that and continue to basically scrape away their purchasing power in the local currency. So, education and learning about money, learning about Bitcoin, learning about hard assets, because it's now more important than ever to be able to hold those assets rather than just holding cash. Now let's get into the on-chain analytics. We're basically seeing pretty bullish stuff across the board. However, there is one area we're seeing that isn't so bullish, and that is literally that there is only hodlers left. There's not many new players coming into the space right now. So looking at the transaction volume on the on-chain analysis, we're at about 200,000 transactions per day, which is a little bit similar to a later stage bear market, similar to where we were in the 2018 bear market. Now, it's not a one-on-one correlation between on-chain analytics and where we are in a bear and bull market, but on-chain analytics does have a big part to play in being able to see where we're going in the future. And what we're not seeing is a huge influx of new users. What it is telling us is the only people that are left are hodlers, and they continue to buckle down. They have deep pockets. Nothing is changing for hodlers. We are knuckling down and we're here to stay, and we continue to dollar cost average. But until we see the new users pick up, we're probably not going to see a big catalyst for the alt season Bitcoin to start up again. In more macro news, we saw President of Ukraine come out and sign a law on the legalization of crypto. This is really cool, but basically they come out and said that banks will open accounts for crypto companies, crypto exchanges will work legally, and Ukrainians will be able to protect their savings in virtual assets. So this is really good. This sort of legislation gives a lot more comfort to people that own digital assets, businesses that want to build in the digital asset space, and I'd really like to see this play out across the other countries as well. Edward Snowden has come out recently at an Ethereum conference and really slammed the central bank digital currencies. And he makes some really valid points here around what happens when there is no physical cash or control of money that isn't completely controlled by governments. What happens when there is this giant controlled ecosystem of central bank digital currencies where at any point the government can literally pick their hand in and take out money? We saw in Russia recently, they've literally decided that you cannot sell your Russian rubles for USD dollars. They can't have full control on that, right? People can still navigate their way around it. But what happens if there's only a central bank digital currency? And instead of banning things, they just take 10% of everyone's money for themselves to try and boost the economy. And you really have no say about it. And that's where this is going. China is leading the way at the moment in their central bank digital currency, the digital yuan. But there's other countries following suit. Edward Snowden mentioned here again, we don't realize that we have immediately been subordinated and collectivized to central actor in the economy. What happens if there's a central actor that can just do whatever the hell they want, and take money willy-nilly, shut you down, and it's all controlled in a digital environment that you have no impact in? Central bank currencies are centralized and are completely different to the decentralized Bitcoin, Ethereum, where there is no control, there is no owner, and you have full control. That's an important separation. Andrew Yang is coming back at politics, but this time he's approaching Washington with a DAO idea. Now, this is pretty cool. Basically, he's trying to go to the American democracy and take it to a DAO, a decentralized autonomous organization, allowing people to vote autonomously through a DAO, through the political process. Be interesting to see how this goes. I'm not too confident this sort of stuff will get through just with how slow politics works, but I like the idea. HSBC, one of the biggest banks in the world, just bought virtual real estate in the Sandbox Metaverse, joining a host of other brands such as Warner, Music Group, Gucci, Adidas, etc. The Sandbox is one of a number of metaverses, and overnight it is increased 8% off the back of that news, as well as some other players such as Paris Hilton and a few other people joining the metaverse. Now, which metaverse should you buy? Should you buy land in there? What about the alternatives like Decentraland, Sandbox, etc.? We've done a couple of really deep dives into the comparisons of metaverses recently. We've done a bit of a deep dive into Decentraland and Sandbox. We've looked at their currencies, their tokens. We're just looking at the land sales, all this sort of stuff, roadmaps. We've done a deep dive here. Our takeaway really is that our favorite is probably moving towards Sandbox. If we only have the time and capital to invest into one, it would be Sandbox. We believe their partnerships, level of community engagement, significant milestones, etc., makes us think that Sandbox will be a much higher adoption than Decentraland. Let me know what metaverse you're buying into. If it's not Sandbox, where are you buying? I'd love to hear from you. And you can also jump over and check out our analysis there at collectiveshift.io, as well as should you be buying land in the metaverse frenzy. So a couple of really good pieces there. You can jump over to Collective Shift and sign up for a free trial, and you can read that analysis there. That's all from me today. Thank you so much. As always, if you'd like to see what crypto we're buying and what we're selling, and if you don't have time to do all the research yourself, Collective Shift is here. Our mission is to help you save time and help you make better investment decisions. You can jump over and sign up for a 14-day free trial. Apart from that, I'll be back tomorrow with our daily crypto show. Thank you, and bye for now.